Let's bring in Jeff Pearson. Let's talk some of our own tech. Enough of all this China stuff. Jeff, Cisco. Oh no, it's down 12%. No better here.
Yeah, absolutely. But unfortunately, I think the outlook side of things are not go well for Cisco here. If we look at their earnings report, they came in with an earnings per share beat at $1.11 versus $1.03, up 29% year over year. Revenue beat as well. 14.67 billion versus 14.61, up 8% year over year. Total software revenue was up 13%. Total annualized reoccurring revenue up 5%, and even remaining performance obligations rose about 12% year over year. But if we look on the outlook side, this is where things got a little bit disappointing. For Q2, they expect revenue between 12.6 to 12.8 billion. Analysts were looking for closer to 14.2. Earnings per share 82 to 84 cents. Analysts were looking for around 99 cents. And on the fiscal year, they actually lowered the revenue outlook to 53 to 55 billion. 53.8 to 55 billion. Prior estimates were 57 to 58.2, and of course that was below analysts' expectations. On the earnings per share side, $3.87 to $3.93, down from their prior forecast and below what analysts were looking for at about $4.05. So some disappointing numbers. The outlook side here shows a slowdown in new product growth.
All right. So not good, not ideal, I guess we should say. The overall growth, though, I mean, it's there. You know, not high, but it's mid to high single digits. Software up, Splunk getting worked in here. I mean, look, it could have easily, done like a Salesforce when they took over Slack and been this whole mess of an integration for a year, stock price getting hammered. It kind of seems like Splunk's kind of going to slide right in here without, any big negative impact.
Yeah, I mean, it makes sense. I mean, it is one of the largest deals that they've done, $28 billion, but they think it's going to add about $4 billion in annual recurring revenue. It's likely going to trim some cost as well after the acquisition, which could help. If you look at kind of what the company said about this quarter, they said they saw a slowdown in new product orders for the first quarter. They think the slowdown is really due to the fact that customers are installing and implementing products that they've been ordering over the last 3 quarters, and they expect that product shipping rate is going to accelerate again in the second half. So perhaps just a slowdown here after a couple quarters of good numbers. The guidance side, certainly not what investors wanted to see, but I think overall, you've got the Splunk deal. You've got a couple pretty good quarters behind you. I think the numbers here are just unfortunate on the outlook side.
Okay. I think that when we saw this yesterday, we all kind of agreed on the panel that it was likely to be a stock that gets hit as a result. So to that extent, I don't think it's terribly surprising that, when you fall short on guidance, you're going to get hit right now, especially when Cisco, I think, surprised a lot of people in its overall strength as kind of being more a disruptee than disruptor. Now, the Splunk acquisition definitely staves some of that off, and Cisco still has solid growth here. Seems like they are very much stable giant in their market, but not exactly a big growth engine at this juncture. Palo Alto, I didn't really know how the market was going to react to this one because everything was good basically, except for the high-end expectation of their billings outlook. Right. Did I get that right?
Yeah, basically. I mean, billings were the real disappointment, both on what they posted for the quarter and for the outlook side.
Oh, okay. So the trailing one was too.
Sure. Yeah. If we look at the report, earnings per share $1.38 versus $1.16. That's up 66% year over year. Revenue beat as well, 1.88 billion versus 1.84 that was expected, up 20% year over year. Billings did rise, coming in at 2.02 billion versus the 1.75 that was expected, but below what some analysts were expecting. If we look on the outlook side, there's some numbers that are pretty good in here. Q3 earnings expectations, earnings per share $1.29 to $1.31. Analysts were looking for $1.25. Revenue even 1.96 to 1.99 billion. Analysts were looking for about 1.97. On the booking side of it, they said they expect about 2.33 to 2.38 billion. That's an increase of about 15 to 18%. That's still below expectations. On the full year, if we look at the expectations for revenue, 8.15 to 8.2 billion, a little bit above what analysts were expecting on the high end. But they did lower their guidance for total billings, 10.7 to 10.8 billion. That was a prior range was 10.9 to 11 billion. below what analysts were expecting, which was closer to 11 billion. So, obviously, this is a company that's done pretty well in this current environment. I mean, we've seen companies under, cyber attack. They've seen strong demand, but they also said that customers are really thinking about how they're spending money, and that's certainly affecting them.
Yeah, all right. That part definitely is a reminder that despite being in the vertical of cloud, cybersecurity, that's so important, constant hacks, also a lot of geopolitical tension that kind of favors some of the more kind of big scale security clients that Palo Alto also, supplies to. A lot of reasons for this company to be in great shape. And so the fact that they show a little bit of a, I don't know if it's, maybe I'm being too positive by describing it as a little bit of a miss, but let's just call it an imperfect report. This is where valuation comes in to mind, because it seems like despite all those things, or rather because of all those things, this should be kind of a perfect report. All the cybersecurity hacks, the fact that they are, by the way, one of the only companies in their category that's at all-time highs, not just 52-week highs. A lot of these cloud companies are at 52-week highs, but not all-time highs. There's a lot of things that suggested Palo Alto was just crushing it right now, but this tells us maybe the market's expectations were too high.
Right, and listen, historically, you look at the deals these company makes, and they're longer term, year or more. They have come in with shorter term offerings to the clients. They are allowing financing through it. It's not ideal necessarily for Palo Alto, but it does give the ability to continue to kind of acquire new customers with these shorter term deals. And to your point, you don't want to soften this reaction here, down 7%, but I think we're seeing very similar thoughts out of analysts. I mean, Barclays did lower their price target on Palo Alto to 273 from 275, so just down $2 on there. They talked about the revenue and free cash flow guidance, and even though that billings outlook came in short and the Q1 estimates were missed, they still think the stock should be down in results, but they said the quarter does not change their long-term thesis. Same thing, very similar commentary from JP Morgan, which moved their price target to 272 from 268, kept an overweight rating on the shares. So I think the thought process here is, yes, there's some macroeconomic headwinds that are going to put pressure on companies spending on this, Palo Alto's offerings, but is it necessarily going to weigh them down for the long term? I don't think that's what we're seeing a lot of analysts come out and say.
All right. Let's talk Microsoft and Intel real fast. You got some analyst notes there, Jeff. Let's go Microsoft first. I guess it's not surprising to see that expectations are getting lifted across the sell side, given their breakout to fresh records.
Yeah, we got Dan Ives from Wedbush raising the price target to 425 from 400. They said it reflects incremental positive AI customer checks with the game-changing Copilot monetization now on the doorstep for Microsoft in 2024. They maintain their outperform on them, and that they're a top pick. They're on their top pick list as well for 2024. Obviously, that 365 Copilot they're talking about is that new offering. It's going to charge about $30 a month to customers. There's a lot of high expectations around that. We know that they've released to some of the bigger names out there, and they've seen positive feedback. And obviously, you got a company that, you look at some of their segments in the last earnings report, Intelligent Cloud up 19%, revenue from Azure up 29%. So some decent numbers. It's not a surprising upgrade in terms of the price target here. All
right. What can you say? You're going to have to chase, even when a bull like Dan Ives has a too low price target. Well, by his definition, he likes to have at least $50 a buffer room. $25 not enough. All right. And the last part here for Intel, kind of a comeback that now is getting appreciated by the street, it seems like. Left behind for a while, but now kind of a favorite.
Yeah, it looks like some optimism, both with the PC market potentially turning around, going into an upcycle, also with some of the spinoff action we've seen or we're going to see from the company. Mizuho upgraded Intel buy from neutral with a price target at 50, up from 37. They think they're lining up significant new server product launches and foundry customer announcements in the next 6 months. They said that the company has a better 2024 compute and data center product roadmap versus their peers and historical rollouts. And they're facing a PC and data center industry upcycle next year. In addition, they think that the the Altera FPGA spinoff is going to add about $17 a share. They also said that they traded at a discount to AMD and NVIDIA out there, which obviously we know those names have been doing well. And, this is a company that cost cutting, some of the macro concerns may be slowing down that PC market, seeing an uptick, even though their top segments have been falling. And even though we've seen quite a few quarters of revenue declines, there's been a lot of optimism that, coming year that we're going to see a bounce back.
There's a lot of days, including today, where the rest of the market has been kind of iffy and Intel's up. So it's a total change of heart by the market for this stock, and it's fun to see the turnaround. Thanks, Jeff Pierce. Intel up big this morning, one of our few tech winners.